please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Right, someone who could be pinched a bit by this. We have with us Mr. Ramesh Iyer, the Vice Chairman and Managing Director of M&M Financial Services. Good morning, Ramesh. Always a pleasure having you with us. Well, let us start there. Cost of capital has risen. Is that going to be a big pain point as you have to raise money at a higher price? How does it look for the rest of the year?
So I think, we are an enabler. At the end of the day, how long can we raise money at a higher price and not pass it on to the consumer? So, and I've always said that maybe we would have waited for a little, say 50 basis point increase or whatever. I think we've reached that period. And as a matter of fact, for some of the products, we have already pushed up our price. So clearly, I would think that any increase in the borrowing cost will necessarily have to be passed on to the consumer over a period of time. Whether we do it now or wait for a little longer, it's just a matter of time, but any borrowing cost increase will get passed on.
So can you give us the numbers, Mr. Iyer? How much has the cost of borrowing, say, gone up over the last, say, 2 to 3 months or a quarter? And how much would you be likely to pass on? I mean, how much have you passed on already and what would the future look like?
So from our overall, if I was to look at kind of a fresh borrowing, it's gone up by at least 50 basis point. And on an average basis, we were somewhere around 25-30 basis point. So at this stage, we have not passed it on to all products, all segment. And therefore, the overall impact would be around 25 basis point that we would have passed on. I would think around the festival or little after that, we would pass on another 25 basis point.
Okay. Ramesh, what about the impact on loan growth? We have seen a fairly strong loan growth coming from your company. The first quarter of FY19 was up 26%. Yes, it was coming on a quieter base, and maybe the base will start catching up by the time you come to the fourth quarter. But will you, as a whole, find less takers as the loans become expensive?
I think the overall demand for the vehicle still remains, I won't say very aggressive, but therefore, one has to look at also the competing space. We don't see too much of competition on there. Possibly the nationalized banks are also not as aggressive as we would have seen them maybe a year back. So we are gaining volumes also from a lack of competition. Two, I would think also that almost all products have now reached rural, and we were looking at our own numbers from Maruti Nexa showrooms. Earlier it used to be a very urban product maybe a year back. Currently we do close to about 700-800 vehicles of them. So I would think our story is multi-product approach and also deep penetration with less competition around there. I'm not too worried about our own growth. But yes, on an overall basis, I would think that the aggressiveness of growth is still not there as much. But clearly, we're not much worried about it.
That's actually a very important point. You're talking about higher rural sales from the Nexa showroom, and Nexa is a premium product. I mean, it's a premium showroom, so all the products that come out of there are high value. Are you seeing such premiumization in other pockets as well? I mean, be it higher tonnage trucks being sold or any other pockets in the auto space? I mean, can you just throw some more color?
So one, of course, is the tractor side is still very buoyant. And it's at the back of infra story at the state levels opening up. I am seeing even at the local municipality, Gram Panchayat spending leading to some kind of an asset acquisition by the smaller contracting segment. The pickup segment is doing well, clearly we see. I'm also seeing, if you look at Renault, Nissan, these kind of car penetration in that market, and also at the back of dealerships being opened in deeper pockets. So it comes from what is the penetration of the dealership, and that leads to consumer willing to look at alternate product. And clearly there for every product, but definitely we don't see heavy commercial vehicle penetrating that deep. It's still an LCV kind of a market which we are operating as far as rural is concerned. The commercial vehicle for us has been a semi-urban market kind of situation.
Okay. Ramesh, I wanted to ask you a bit about asset quality. It was about a 10% increase in the last time you reported numbers. I mean, quarter on quarter, your GNPA went to 5,530 crores from 5,000 crores. and as a percentage also 9% became 9.4%. Now as interest rates rise, do you think that there can be some pain point in the MSME, SME loans?
I think the absolute number increase in GNPA has to be seen from the overall asset growth. Therefore, more contracts do become moving forward kind of a number. So one has to look at, you're right, the 9.4% number. But if you kind of were to look at it from maybe 2 quarters back or 3 quarters back, we had even touched 12 and 13. So we continuously are seeing a correction to our GNPA. We are continuously seeing improved collections to almost all our contract segment, and we are moved to Indias that would have had some impact, though not substantial. Clearly, we see from here on only a correction for simple reason that, as I always say, the last 2 quarters are the best 2 quarters, and historically we've seen that also. And with monsoon being average plus, clearly the cash flows will hold up. So I don't think even on the collection front we look at any worries. We would rather see correction to our gross NPA come down from a maybe 9 to a 7.5 kind of a number, and the overall collection efficiencies are good. I must also tell you the interest rate increase normally even by the consumer. After all, we are working with earn and pay segment. You would see them correct their freight rates. You will see them correct their passenger fare. So I think there would be an overall impact in as far as the increase to all these input prices are concerned.
Since we're talking about freight rates, fuel costs, etc., I just want to understand from you, I mean, prices of fuel, petrol, diesel have now hit record highs. To date, have you noticed that an increase in operating cost has had any impact on sales at all? I mean, any impact on your business?
I think my own understanding as far as the sales volumes are concerned, whether fuel or an interest price increase normally do not cause too much of impact on the volume. It's only when the vehicle prices go up you would see the volume impact, because these are operating costs, and as I said, the operator do pass it on to the consumers. Have we already seen increase? Have we already seen increase in freight rates as well as the passenger fare? Not yet. But I would think that it's somewhere around the corner. It may possibly be before end of this month one would see increase in all these prices.